All righty, looks like we're live. Welcome to another Properties and Beers. My name is Gaurav Gupta, CEO of Ethical Property Investments. We help everyday Aussies build high cash flow, ethical property portfolios that do good and make money. So, tonight we're going to be doing three big things, which is number one, reframing the anxiety about the perfect market timing. Number two, helping you reset your mindset for long term investing success. And number three, chatting about the real SDS supply and balance, some of which we chatted about on yesterday's webinar. By the way, if you want a copy of yesterday's webinar, drop us a line, let us know. More than happy to send you a copy if you're unable to come to that sort of really amazing webinar. We got some really good feedback about it all because we discussed everything, the pros, the cons, everything else in the middle. So let's chat about what's next. And here we go. We have a little challenge. I'm gonna just adjust it. Bear with me. There's a little tech challenge. Alrighty, fix that little tech challenge. All right, if you're watching, welcome again, and let's chat properties and beer. So if it's the first time here, what we do is we crack open a beer or some sort of alcoholic, usually it's alcoholic beverage, and chat about properties, beers, and what have you. And if it's multiple times here, you know exactly what we do. So today's special is Comet Beer. We have a sour. Those that have watched properties and beers not before know that I'm a huge fan of sours. And today we have a hibiscus and lemongrass sour, unusual sour. Let's give it a go. Crack it open. Oh, don't spray everywhere. Brewed by Three Ravens. It's actually really good. It says the taste of space. Let's give it another go to see if it is the taste of space. Actually, it's not bad. Would I get it again? Oh, look, I'm more a fan of the Moondog sours, but it's not a bad sour. I'll definitely get it again. Once again, it's Comet Acid. Comet Acid. Weird, but interesting. And yeah, look, I would definitely look at getting it again. So let's chat about truth versus trend. Are you waiting your future away? And so if you're waiting for the perfect market, you'll never buy anything because here's the truth. Most people don't get priced out. They talk themselves out. I've seen that multiple times over the last. It's been over a decade of teaching people how to invest in property, and looking at which areas are best, and they talk themselves out. We had the same issue when I had multiple people talk themselves out of investing in Gold Coast 7 years ago. Now, if you had the opportunity to buy a house and land in Gold Coast for under $400,000 7 years ago, my question is, how many would you buy? Right? Not would you buy, but how many? Yet people were like, Goro, we're not sure. Sorry, it was about 8 or 9 years ago. But people were like, hey, Goro, we're not sure if it's a right fit for us. I was like, you're crazy. And some others who would invest in Southeast Queensland actually exited early because they were fearful. Because here's the thing, right? Most people confuse media trends for property fundamentals, and they lose years of growth. And every week I hear, should I wait for interest rates to fall? Well, here's the thing. We've chatted about this last week. You know, if you follow the headlines, it's going to cost you more than any interest rate ever will, because a smart investor looks past today's noise to find tomorrow's opportunity. And there's a lot of noise, a lot of fear around investing in Melbourne. I think that's underpriced. And I've been talking about this forever. So remember, I'll recap what I talked about last week. Ignore the headlines, focus on income, and act on strategy, not speculation. Because if headlines made you rich, journalists would be millionaires. That's the truth, right? Big calls, right? So I also wanted to chat about long-term mindset. So it's really important we zoom out to stay in control, because there's always going to be ups and downs in property. If property was consistently growing 6 to 7% a year, it would be kind of boring, but it would be great. That's just not how investing works, right? Booms excite people, busts scare them, but long-term investors don't flinch. They don't get swept up in the hype and crushed by setbacks. They zoom out, right? And here's the thing. Before I go further, did you know that 80% of our thoughts are negative? That's why reacting emotionally, whether it's headlines or short-term price changes, it's That's not strategy. That's reactivity. So focus on what the reality is. Don't think necessarily super positive or super negative. No, super positive or super negative. You've got to look at what the reality actually is. So I'd like you to instead, if you're looking at investing in property, focus on patterns and not moments. Make decisions from data and not dopamine. And remember to stay grounded in your why and not the market noise. So if your why is about growing your wealth for your family, hey, maybe choose to focus on that. Because here's the thing, real estate wealth wasn't built in one moment. It's built on 100 small ones over time. And long-term investing isn't just smart, it's sustainable. And I will leave you with this before I go to the next point. You do not need perfect timing. You need consistent action. And those are some of my thoughts around long-term investing, because so many people focus on, is this going to grow, or I'm going to lose money in this, or there's some negative piece of news here. And if you remember what Warren Buffett said, right? He said, when people are buying, hold. When people are selling, buy. Because here's the thing. If it's underpriced, maybe you should look at see why it's underpriced. That's why I believe Melbourne's underpriced. And I see so many people afraid to hit the trigger button at the moment. And it worries me. I'm like, hey, you're about to lose out on the boom of a lifetime, where, in the next few years, we'll probably see 30 to 40% growth in the Melbourne area. But that's my personal belief. And while I understand not everyone follows it, that's something that we should definitely have a look at when it comes to investing. Have some beer. Now, but if you've got any comments or questions, feel free to drop us a line. Now, let's chat about SDA oversupply. There was a report released a couple of weeks ago, and here's the thing. What it came down to was that trust matters more than the trends. Did you know there was $131 million of SDA funding that went unused last year because the right homes didn't exist? It's not that the homes didn't exist, it was the right homes that didn't exist. And look, there's currently about 9,000 Aussies with SDA funding still waiting for the right home. But the hard truth is, many people have already kind of got it invested, but many people have invested and they trusted the wrong people. And that's created a noise in the market that SDA investment isn't a good investment. NDIS SDA investment isn't a good investment. Bullshit. It's because they trusted the wrong people. The hard truth, as I said before, they invested, but they trusted the wrong people. So if you want to know the recent data, it actually shows that the 10 most saturated areas in Australia for SDA are Queensland areas like Logan, Ipswich, Moreton Bay, Toowoomba, and Bundaberg. Places where people were investing, I was like, hey, you might want to chill out with investing there. Parts of Victoria, such as Bacchus Marsh, Wyndham, and Casey. In fact, today I was telling someone not to invest in that Wyndham Bay Whale area. And like, oh, why? Because it's already got a resident in it. Might have a resident in it today, but it might not tomorrow. And even parts of South Australia like Port Adelaide, Marion, Playford, Salisbury, we're seeing vacancy rates in these areas of over 50% in over 300 homes, according to extrapolation from the most recent data. And yes, there are some things, data can be manipulated 100 different ways, but that is a good indication of where not to invest, right? Here's the thing. Why are these areas oversupply? Because here's the thing. These properties weren't built in the areas for the people they were supposed to serve. Investors followed the hype and not the fundamentals. So here's how I see it. SDA oversupply I'll start that again. SDA oversupply isn't a market issue, it's a postcode issue. And behind every unmet SDA is a person with a disability still without a home. And that's my honest belief. So here's the thing. Smart, ethical investors understand to avoid those overbuilt suburbs, partner with the teams that know the SDA space inside out, and design fit-for-purpose homes that actually get tenanted. Because here's the thing. What's better than rental income? Real rental income with real-world impact, right? Because trust matters, experience matters, impact matters. Sorry, this beer's coming up, but it's tasty. And so I'll leave you with a few thoughts of mine, right? I believe you should act on truth and not hype, because there are two types of investors: those who wait and lose momentum, and those who act with clarity and build real wealth. At the same time, there are two ways to respond to headlines: freeze in fear or lean in with real data, values, and clarity. Right? And we have, before we go further, we have Cameron. Cam, what's going on, dude? Any questions? Good to see you online. Drop us a line, let us know what you like. I'm watching the comments show up on the other screen here. So just to recap, guys, while we're waiting for Cam, if you've got any questions, is, don't worry about the perfect market, right? But also you should look at the mindset for long-term investing success. And along with that, if you're looking to invest in NDIS STA, partner with the right person, not with someone who's just trying to sell you a property, right? And here's the thing. Today, this is Properties and Beers. We cut through the noise, build with integrity, and always lead with purpose. Do good, make money, and repeat. See you at the next Properties and Beers. Cheers, guys.